the British pound. It seems now that they might be voting on yet another deal to divorce from the European Union by the end of the week. Where does it all go from here? We're joined by Adam Button, Chief Currency Analyst at ForexLive. Do we have any more clarity now on the Brexit mess? Clearly, Theresa May has lost control, but I don't know if Parliament's doing much better of a job.
It's a real embarrassment. I mean, we think we have it bad here in Canada from time to time. We're in the U.S., but they don't really have any political parties left. It's a mess. It's a fight for leadership. There is no cohesiveness or unity. They had 8 options to vote on yesterday, and none of them passed. So the buck is kind of passed now from just on Theresa May to all of Parliament. They can't get anything done. Now, they're going to try for a vote tomorrow. It's kind of a meaningful vote. It will give us an indication about where we're at. Now, the last time we voted, 75 people needed to switch their vote. It looks like somewhere around 60 might do it. And so you're still short, though, in this situation. So it leaves the market in a tough spot because you're essentially out of time.
Yeah, when it comes to being a currency trader, you take a look at the British pound. Unless you have to trade it, which obviously there are transactions where you need to either buy or sell the British pound, do you just stay away from this thing for now?
You see the retail frustration, and people dip their toes in, and you start to see, like yesterday, it looked like there was going to be a deal. She made this offer to resign, and some people started to come over to her side, and then it just kind of stopped. So it went up, and then it went back down, and the headline risk is just brutal if you're in the day-to-day. Now, everybody looks back and says, well, if we get a headline tomorrow that the DUP, the Irish Party, will support it, the pound can go up 5% over the next couple of days, like in a hurry. So there's plenty of reward there, but it works the same both ways. If Theresa May walks away, and God knows why she hasn't already, then it can fall down as we kind of descend into this chaos. But that's kind of the lay of the land in that trade. It's all politics right now.
Since the last time you and I spoke, there has been a federal budget. Obviously, these are deficit budgets, and Fitch took notice. Didn't say, your AAA rating is going to disappear overnight, but they're sort of starting to question the amount of debt and deficits we have here and whether that means a top-notch credit rating. How does it all play through for the Canadian dollar?
Right. I mean, Canada is in an enviable situation. It's one of only 13 countries in the world that have that AAA rating. If it were to lose it, we're still a long way out. They'd warn there are a few steps to go towards cutting it. It doesn't come out of the blue. Canada is in a situation where federally we're in a really good spot. Provincially, we're in a terrible spot, and that budget's coming up here in Ontario. Some other provinces are struggling as well. And then in terms of households, it's dire, but it's dire on the big numbers. If you have a $500,000 mortgage on $1 million house, I mean, you have $500,000 in debt, and that seems like a lot compared to GDP if you add it up. But really, your net worth is, significantly into positive territory. So it really is only on the margin of people who are leveraged. So Canada, by and large, is in a very good situation on debt. A recession will come at some point, and we have pockets to dig into, especially in the currency market where you're comparing it to other countries, the U.S., Europe, where it's much worse than it is in Canada.
So with our currency hanging around the 74, 75 cent market bounces around, do you see much further upside or downside in the next little while?
It's a touchy spot right now. I mean, housing is vulnerable. The consumer is tapped out. The government doesn't want to spend right now. Provincial governments are probably going to cut in the next, maybe in the next month. So a recession could come. I mean, growth isn't here. And in the long term, there's really no scope for growth until we can get regulation improved in this country, or we can get some dynamism back in the economy. Because to me, it's looking like a 1.5% economy from here to eternity. And that's just not the kind of thing that's going to ever attract any significant investment and get the Canadian dollar moving. So it's really flat to the downside here for the Canadian dollar for this year and into next year.
All right, so we talk British pound. Obviously, it has its Brexit drama. The Canadian dollar has its challenges. You say, though, there's one currency trade to look at that can act like a barometer for everything. What is that?
Yeah, we're looking at global growth as a whole here right now, and that's the lever for Canada. It's the situation for everyone, and that trade is the Australian dollar against the yen. Now, the Australian dollar is a great barometer for growth. It's a mining export country. It's a consumer economy. And it's been doing very well for 20 plus years, where the yen is the stable currency of the world. So when things get bad, money goes into yen and it'll come out of the Australian dollar. Now, if you look at that trade over the last few months, it's gone sideways. You see since the start of the year, it's really tracked in about a 3% range, and that's unusual for that pair. And we've had this dynamic this year where we've had worries at the start of the year, and then we've had, okay, China's stimulating, and that's very good for Australia. Looks like we might get a China-US trade deal. That's good news as well, but it hasn't been able to break out to the upside or the downside. Eventually, it's going to go, and when it goes, I think that's a great signal for the entire global market system.
All right, interesting one to watch, the Australian dollar and the Japanese yen. Always great to have you, Adam.
Thanks, Greg.
Adam Button is the Chief Currency Analyst at ForexLive.